Hey guys, this is Market Update. Certainly a mini disaster right here. We've broken through this uptrend. This structure is just completely wiped out at this point. This may be a delayed reaction because of the shutdown. 30% of GDP in the US is government spending. So if you stop that, right, if you stop benefits and paying government workers, you're going to have an issue. And so this may be a delayed reaction, but I don't see any kind of V-shaped recovery here because you would need policy, right? You would need government policy, fiscal policy or Fed policy to kind of really change. And it doesn't look like they want to react that much. So I think this year's done. Look, maybe we have a little recovery if the TGA starts to draw down because that money is seriously disrupted, right? US government payments. So if that starts to flow in, maybe markets ease down a little bit and everything's fine. But look, 25 I think is just over. And 2026 I think is going to be pretty good year for crypto, to be honest. And I'll show you why in this video. We're in a game of chicken versus the Fed, and I'm not going to chicken out. The 20% discount code for the course expires November 24th as well. I'll link it below. Free updates forever, like 300 videos on investing and everything else. If you type BTC at checkout, you can get 20% off. The game of chicken that we're all playing here is that we are investing through multiple sovereign debt crises and the complete collapse of multiple currencies at the same time. Currencies do not collapse down, they collapse upwards, right? Meaning that the price of everything has to inflate. But it can't just get out of hand, because if it gets out of hand, you have complete social disorder. So the Fed's job with the government, if they work hand in hand, is to try and keep the collapse within this certain range. Humans respond to volatility and not the actual general trend rate of something. So if something inflates or debases itself, like if your savings debase by 2 to 5% a year, and that's just the normal way that it goes, you're not really going to notice that. But if something happens in a volatile fashion, like 20 or 30%, that's when humans actually say, hey, I've realized, I've found this volatility and I'm upset about it. And so that's the game, is to continue this at 2 to 5% a year so that people don't notice. And you have to go through these periods where the Fed and the policy that they create shakes you out and takes away some of your ability to have power within this system, right? So this is just normal. But the reality is the currency is collapsing and we are all trading that currency collapse. Currencies collapse upwards, meaning they debase themselves, and so the assets that are valued in that currency all go up. Do not get shaken out, right? Do not chicken out of this trade because it's absolutely certain. This is the S&P 500 over time and the earnings per share. It is impossible to earn more money unless more money exists. Fiat currency is not a natural thing. It's not in the ground. It isn't growing on trees. It is created by humans. It is collapsing. There is more and more currency over time, right? And the only way the stock market goes up in value is because there is more currency to value it. You value in dollars, which means the amount of dollars is the factor determining whether the price of these things goes up or down, right? If you take currency out of the system, which is what Trump is doing with tariffs right here, you are taking currency out of the system. You are increasing the tax rate from the government, who is taking that currency out of the economy. And so there's less economy to chase goods and services and asset prices, meaning that asset prices should go down. They absolutely should go down because there's less currency to value them. So Bitcoin should be going down, right? Because tariffs are increasing. They have yet to take that money and use it as a bribe, as a stimulus next year during the midterms, when they say, we've taken all this money away from you, now we're going to redistribute it to you in the form of a bribe. Please vote for us in the midterms. This is what happens, and they're telling us this. This is the game that we're playing. But I'm not going to get shaken out of this, right? The S&P only goes up because the currency is debasing itself. To prove this is the Caracas Stock Exchange. Now, if you saw an altcoin chart like this, right, absolutely amazing. The reason why this doesn't make news, and no offense to the Venezuelan stock market, but it's valued in Bolivar, which is a collapsing currency, right? Meaning that there's just more and more printed each day. So this isn't real value. You're just valuing stocks and assets that don't debase themselves as fast versus something that is debasing itself much faster, right? So no one actually thinks that this is good. You're seeing a collapse in the currency. These are the same picture. You're seeing a collapse in the currency. So the game is to get out of this and be in assets. If you are a bear, right, and you want to short the market, you're going to get wrecked because the bear trade is to actually go long Bitcoin, right? What you're doing is going short the currency, which is debasing itself. Look at this, right? It's the same picture. If you're a bear, you should buy Bitcoin. People think that bulls are buying Bitcoin. You're actually the bear on currency, right? That's the trade. It's not to go short the stock market, right? Because that's the thing, that's not debasing itself. Bitcoin is not debasing itself, right? Why would you go short the asset that is not debasing itself instead of going long that asset versus the debasing currency? This is the game we're in, right? There must be more currency printed, but the game is that you can't debase it too fast and too volatile, because then people start to notice. The game is humans do not notice 2, 3, 4, 5, 7% of their earnings being stolen away from them, as long as it is consistent. As long as there is not much standard volatility in that theft, right? Then people won't notice. But people do notice when you print 50% more money supply in a year like they did during the pandemic. Then you get social unrest, etc. Politicians don't like that. This is the trifecta game of chicken that we're playing right here. So they have taken money out of the market, which has destroyed a lot of the economy. And I think they're going to take that money and basically use it as a bribe during the midterms next year. And the Fed is playing the game that they actually want to draw down markets as much as possible, because they know they need to print money, but they need it within this range of, let's say 5 to 10% each year. That's the game that we're playing. And you have to go through this volatility. The game is 100% the currency is going to get debased. So trade long the asset. You buy dips instead of selling rips, right? And we are nowhere near overbought for Bitcoin or anything like that. And so stay in and don't chicken out of the game. The reality for Bitcoin is that it's going to go down and sideways pretty much always, unless government or Fed policy steps in to pump things higher. And it always will. They always will do that. That's the game. But you have to go through extreme volatility when they pretend like they're not going to. The whole point here is to make sure that the theft happens at 5 to 7% a year, just like this. If it's too fast, then people will start to notice and you start to lose votes. People don't like inflation, right? If it's too low, the financial system literally starts to collapse in on itself, because the debt always stays the same. And if prices come down, which they should naturally do, then wages come down and all the debt goes bankrupt. You can't afford to pay for it. This is the game that we're in. So we're just trying to do this, right? And so Bitcoin gets ahead of itself, then it pulls back, and they say that liquidity isn't there, but then they pump it again. This is the game, right? The game is the currency is absolutely dead, right? Not just the US, every currency. I mean, the US is the best one, right? Every currency is totally dead. And the game is pump assets and shake people out, right? Every child born retroactively from January 1st, 2025 for the next 3 years is going to get a $1,000 account that's going to be invested in the US stock market. Take away the politics here, where they're kind of advertising it as something great for kids to get them invested in the stock market and have some savings, right? Where are we? Where's the money coming from? Where is the $1,000 coming from? The government doesn't have any cash, right? It's absolutely done. It runs a huge deficit, trillions of dollars. Where's the cash coming from? Where are they going to get that cash? Well, like, literally where? So they're going to print debt to buy the stock market. You have a government printing debt to buy the stock market. What is going on here? This is Caracas Stock Exchange type of stuff. And these are conservatives apparently, right? This is an absolutely a debauched area that we're in. Like even just from a simple thing, like, do you want to be any part of that? Like Bitcoin is like, okay, so Bitcoin exists and they can't do anything to it. Wow, thank God for this anchor in this storm, because this is just absolutely awful. How can you make any logical arguments about stock market valuations when the government is taking money that doesn't exist and just pumping it into the stock market? This is outrageous, absolutely outrageous, right? What happens when the government gets involved in a sector? The price goes up. College textbooks, medical care, childcare, housing, right? These are all sectors where the government's heavily involved. The Fed prints money out of nowhere to buy mortgage-backed securities, so the price of housing is completely detached. Medical care services, with a big fight going on about that now with how much the government pays. If you force government money into a sector, the price goes up because the free market pricing mechanism's completely out at that point. Look at these areas where the government doesn't get involved, like software, cell phones, clothing, right? You get mild deflation as we get more efficient at doing things. So this is it. If the government's involved, don't worry about the stock market, right? If they're literally printing money out of thin air to buy the stock market, they don't have it, they're putting it into the stock market, don't worry about the stock market going up over time. And don't get shaken out either. This is it. So anything the government is involved in, they completely wreck all of the free market pricing mechanisms. That's the issue. Now, what we're doing here, right, the game, is they need, inflation low enough so that they can print money for a while, right, without inflation going up. If inflation's at 5%, they can't print enough money because then inflation goes from 5 to 8%, and then we all start to notice again. So what they need to do is shake us out, get us scared, get us unemployed, right, so that we can't demand higher wages, so that we just go back to work like we're little drones. We don't complain. Inflation starts to come down, then they can print that money again. They can print the money. That goes through into the system. They can buy the government debt, right, which is just essentially the debt is waiting to get bought by the Fed, right? The Fed isn't playing ball with Trump right now, but they will eventually, because in the spring next year, they're going to replace Jerome Powell and get someone in there who is already saying, we need to cut rates. We need to cut rates a lot. They're ending QT in December. That won't change anything, but they're going to have to print the dollars again. They're going to have to increase liquidity again because the currency doesn't exist in the world. You can't find it. You have to print it. So the Fed is playing a game where they want to see this shakeout. They want to see this collapse first so that gives them the cover to actually print this money. And the tariffs, right, they are taking currency out of the system. So assets should go down. Take away the stock market, the top 10, 15 companies. It's not great, right? The economy's not doing well. And that's because of this, because tariffs. You're taking currency out of the system. You are starving the system of oxygen. Right? And so this is going to pump. When Powell goes, he probably won't do much before, but when Powell goes, they're going to pump it, right? And cut interest rates. And that pays for a lot of what they want to do, giving away money and putting it in the stock market. Right, bond issuance by big AI tech companies. This is what's pushing stock markets higher. Bitcoin isn't the stock market, right? And the rest of the market isn't doing well, right? If you look at a lot of sentiment surveys, people don't have good sentiment right now, and that's because you've starved their oxygen, right? Everyone has debt, but you can't pay it because there's not enough currency being printed. The Fed has to print it, and they will. So we're playing a game of chicken right now. Again, I'm not going to chicken out because I know that the currency has to be printed. So they can try and shake me out what they want, but it doesn't matter, right? Bond issuance. That is what's leading the big capex boom and pushing markets higher. People are quite nervous, right? Because you're like, so all these companies, they had a lot of cash and they were earning money buying back stock. Now they're re-leveraging again. Everyone's just really nervous, and people just have to calm down, because the only thing over the long term that has to happen is that money has to be printed and put into the stock market to keep it higher. Right? Otherwise, all the debt collapses and people are getting more and more entrenched in debt, right? So the interest rates have to come down to ease things. Otherwise, you get lock up, right? These guys can pay, right? No problem, like the hyperscalers. But interest rates have to come down in order to pump the market again, right? Otherwise, the price of everything will come down. Currency has to be printed. So we're in the game right now, right? They can't just collapse and say, we're going to print money. They have to pretend like the whole thing is going to collapse so that we go into ourselves, we don't bid up prices, and they can print money under the surface again. That's the game. I know the game, and I'm not going to chicken out of their game. They're not going to get me to chicken out. You, Mitch, expect a change in unemployment, right? What happens when you take money, currency out of the system is a recession, because all the recessionary data and details are in relation to how much currency there is. Because we earn currency, we take currency as debt. This is what they did. They increased tariffs to reduce inflation a lot, so that on the other side, they can reduce interest rates and start printing money again. That's the economic cycle. So we're in this, again, I'm not going to chicken out. I do not believe we're in the part of the economic cycle where we're going into a 18-month bear market, because those bear markets are created by the Fed. Markets should all go down. The price of markets only relates to the amount of currency in existence, right? If you actually price markets properly, they should not go up, right? Because goods should not inflate in price, right? They should actually come down as we get more adept at making those things. We should actually see a reduction in prices, right? But that never happens, right? Because we value in debt currency, and the debt currency increases, right? We are not in the part of the cycle where so much inflation has been created that they have to then raise interest rates and bankrupt everyone. We're actually in the bankrupting part of the cycle, and stock markets have gone higher because of 15 companies and a huge capex boom. The rest of the economy is not like that. So if we're in a low in the cycle, then why would we be going into another low, right? We are not in a massive jump up. Up here, that's where markets are far too exuberant, where too much currency has been printed, too much inflation has been printed. You have to draw it down. We are not in a drawdown. We're actually in the low part of the cycle, where the next phase is probably to lower interest rates and print the money again, right? So that's why I'm just not worried. I think it's the game of chicken that we're playing. Bear market is where the Fed tries to bankrupt you, but we're already in that part of the cycle. The next part isn't another bankruptcy, is it? Right, so you're going to get huge volatility as the market seizes up and everyone's saying, I've just had enough, and then the Fed relents because you must have this, otherwise you bankrupt absolutely everyone, right? Literally the debt is unpayable, right? The other thing is, we know that they're in this phase right now because they're lying about tariffs, right? And remember, their job is to bankrupt everyone, then print money, bankrupt everyone, then print money, to make sure that inflation doesn't get crazy out of hand over time. Just 2 to 5% or 7% over time, that's what they want. Tariff changes in the economy. This is from the SF Fed, the San Francisco Fed, right? This is a study over 150 years that says tariffs are a tax. We know that they're a tax because they're drawing currency out of the economy. Inflation goes down the higher you raise tariffs, right? If you have a change in tariffs, the higher it goes, and there hasn't been many this high, right? But Trump's certainly were, in fact, some of the highest on record, right? So as you raise tariffs, inflation comes down, and that's because inflation of goods and services is priced in dollars, currency, and so the more currency that you have, the more currency you put into the economy, the more currency is there to chase the price of goods and services. If you take tax out, if you tax all the money away from everyone, the price of everything has to collapse. Bitcoin should be collapsing. There's less currency around. There is not enough liquidity. Inflation goes down as you raise tax and take money out of the system. Unemployment goes up as you take money out of the system. Currency is debt. Debt needs to be paid. If you take currency out of the system, everyone's debt stays the same. You are taking oxygen out of the room. Unemployment goes up and inflation goes down, right? And you can see that here. Change in tariffs. This is the next year after that. Tariffs still deflate inflation and unemployment still rises. It's happening now. The Fed is pretending like this isn't happening. This is from the Fed. This is data from the Fed from 150 years of tariff policy. These findings point towards tariff shocks acting through an aggregate demand channel, right? Over the economy, inflation comes down and unemployment rises. And the Fed, Jerome Powell, is saying tariffs raise inflation, right? So you've got the head of the Federal Reserve, right? Did he send an email out before saying this? You think you'd send an email out, right, to the other Fed members saying, hey guys, do you have any data about tariffs and how they affect the economy? And they would have sent him back this and said, tariffs decrease inflation and raise unemployment. And this guy says, okay, thanks for telling me that. We would have cut interest rates this year, but tariffs are going to increase inflation. If not for the expectations of higher inflation from tariffs, we would have continued cutting. Jerome Powell is lying. He's absolutely lying, or he's a moron, right? Because he doesn't look at data before saying stuff. Now, we know that he's not a moron. We know that he's in the game of chicken with us, trying to get us to chicken out, trying to tell us that inflation is so bad that we need to cut spending and cut everything else and cut hiring people and everything, right? This is the game of chicken that we're in. And he's playing it well, but he's going to be late, as he always is, Jerome Late Powell, right? The market is seizing up, and we know that they can't let that happen for too long. And so the reaction eventually is going to be, from the fiscal side, Trump saying we're going to redistribute the tariff money, or them cutting interest rates, printing money again. Stay the course. This is not a Fed-induced 18-month bear market that we have ahead of us, right? The thing that they're going to do next is become softer. So short-term volatility in Bitcoin is totally normal. 50% drawdown, you're going to have to expect it if it can come easy. But we're not going into an 18-month bear market if these guys are going to go softer. He's lying. He's absolutely lying. The data proves it. He is lying to manipulate our behavior short-term and shake us out. Redistribution of money to manipulate the price of everything. Trump promises $2,000 tariff checks by mid-2026. We don't have a pandemic or anything else. He's taken money out to draw things down, and then he will pump it back into markets to manipulate behavior and to bribe people to vote for them in the elections. He said mid-2026. When do the midterms come? Mid to late 2026. This is disgusting behavior, absolutely disgusting. I don't enjoy it, but this is the game, and this is the game we play when we're in markets. The horse has already bolted, right? The currency has already collapsed. It's totally debauched. You have to be in something else and not this. Don't get shaken out. We're in a game of chicken against the Fed, and I'm not going to chicken out, right? This is what 8% average return looks like on a compound interest calculator. This is what it looks like to hold, right? I'm not going to chicken out. I know what the game is. We're not going into an 18-month bear market. If the recessionary data comes in, they are going to react and print the money. So if you want the 20% discount, the crypto course, just type BTC at checkout. 24th of November, that expires. Bybit deposit bonus as well. If you trade crypto up to $30,000, if you deposit anything on there, they'll give you a big bonus. Link below for that as well. I'm James, this is Money ZG. Cheers for watching, and I'll see you in the next one.